A big swing of more than 259 points today. The Dow has crossed the unchanged line some 33 times so far, but in the last hour, no, we are going straight up. Volatility, which had been up earlier, now too is reversing, but in the opposite direction. It is down. That means fear is coming out of the market, down 2%. You got to stay with me because we have 31 minutes left in this hour before we hear the closing bell. There's a lot of action here. This is your money, so we want to get to safe strategies. And among them, we have Silvia, Wells Fargo's chief economist, along with our traders at the New York Stock Exchange and the CME Group. To you, Keith Bliss, first at the NYSE. What's going on here? A real positivity in the wake of yesterday's Fed meeting, which looked to me like gloom and doom.
Well, I think what happened is the session here, we finally got to the point where we shrugged off the bad news from yesterday and also what happened in the overnight session. I'm still a little skeptical about what we see in the market right now. While you are pointing out that we are positive on the Dow, slightly positive, and the S&P has gotten back above the unchanged line to the positive side. The VIX is still dancing around 20. The transports are still down, and the Russell is still down. And to me, those are still warning signs. I think it'll be interesting to see if we can get an up day out of a day where we have oil just gotten clobbered in the session today, and we now have that oversold. So if we can disconnect those two, and equities can start trading on their own merit, then we might see a little bit of a change. But I'm still going to be very cautious here, Liz, especially as we enter into the Brexit debate full steam next week. I'm not going to get too excited here.
I'm sure, Silvia, you feel the same way at Wells Fargo. You're watching this and you say we've got to watch for that UK vote on whether to exit from the European Union. That's next Wednesday. But do you think that because the Fed funds futures pits, where they bet on the probability, show pretty much no possibility of a rate hike for the rest of the year, what do you think? Do you think we'll see even a rate hike maybe in December?
Well, we may, but, the financial markets have been pretty good about this. There's a strong sense that it's very difficult for the Fed to move, certainly in front of Brexit. But once again, when you look at the actual numbers the Fed is producing, they continue to lower their projection in terms of the federal funds rate. They lowered their GDP number. They talk about inflation rising sometime in the future to 2%. But I think the financial markets got it pretty well. The Fed's postponing raising rates. They're very cautious on raising rates. And I think it's going to be a while before the Fed does anything.
Larry, I want to get to what Keith just said about oil. Oil in the aftermarket is now at the lows of the session. So we've got a significant move to the downside here. This is now probably a 3.5-week or possibly 4-week low. We're on track for the 6th losing session. Well, we had it. I mean, the regular market already closed, but Brent, which trades overseas, down 9% over just the past 5 days. What's going on here?
Yeah, you know what's really going on? It's really risk aversion. It's Brexit. I do believe that people are overreacting to the risks and the consequences of Brexit. Yes, there's a lot of unknowns, but that's weighing on risk markets right now. The fundamentals for oil right now are pretty strong. I mean, demand growth remains pretty good. Production declines in the U.S. have slowed down. Canada's going to come back online any time now. So I'm not saying oil should suddenly be up at $70 a barrel. I still think $45 at the end of the year makes sense, but I do think we'll see a draw at the end of the year. When you look at the commodity space in general, oil in particular, it's really about Brexit and nothing else at this point.
Okay, nothing else. And I do have to ask you, before we go, Silvia, if the UK does vote to exit from the European Union, will that trigger a recession here in the United States? The European Union is our #1 trading partner.
No, it won't trigger a recession, but you got to expect the dollar will be stronger, the Swiss franc will be stronger, both the pound and the euro will be a little bit weaker, and it'll create a longer period of uncertainty in terms of economic growth in Europe. And for the U.S. companies that are involved in Europe, it will create more uncertainty in terms of their future earnings.
Great to see all of you. Silvia, Keith Bliss, Larry Schover.